All right. How you doing, Margie? Uh-oh. Margie, can you see the sample commitment? Can you give me a thumbs up? Can you see the
Yes.
sample commitment for title insurance?
Yes.
Okay, great. Just wanted to make sure.
I can.
Okay.
Okay, thank you.
Okay. I normally am a stander and a walker arounder. I've got Margie here, so I'm like thinking maybe I'm gonna move my computer over here. That way I'm not sitting down. So give me 1 second. I actually forgot that we had people on Zoom. So hold on 1 second, Margie. Don't get seasick.
Okay. Okay.
Okay.
Thank you for accommodating me.
Da, da, da. Okay. If I stand here, can you see me? Kind of. You can see my little head. Okay. Really, the important thing is that you can see it's on your screen. That's really the important thing. I'm gonna grab my handout because okay. All right, so the first thing, well, hi Andrea. Hi. Hi. Same with you is back there. I'm Andrea Hyatt. I think I know. Okay. They are Stonegate title. So this is not a CE class. This is just an informative class. So we're going to be going over how to read a title commitment, understanding the difference between the enhanced policy versus the regular standard policy, and then some examples of hidden risks in the title commitment. So if you have any questions, I think that we all learn best that if you have a question, somebody else is probably thinking the same thing. So just shout it out, yell it out, raise your hand, whatever. I love interactive classes because you know, it's real, these are real life scenarios a lot of the times, and you're probably asking a question because you've gone through it in a transaction. You're like, I really need to know this. So, okay. So first things first, just to get the lay of the room, do we have any first year agents in the room? Kind of. Okay, so a couple of first year agents. Okay. If I say something that's like an acronym or something you're like, I actually know what that means, just stop me and say, hey, wait, what does that mean? Sometimes I make the mistake of either going too fast or thinking that maybe people know some things that they don't. So if that happens, just say, wait, hold on, time out. What does that mean? So okay.
This is not Teresa's first year.
I know. There was other people that raised their hand.
I know. I just wanted to tease him. His details.
He's also not 45 years old.
Doesn't give one meeting he said he was 45. And
I was like, Teresa, how much Botox you shooting in your face?
You almost has 38.
It's a running joke.
Don't.
It's a joke. It's a joke. No.
I've been licensed since.
That's so funny. Okay, how many of you guys were at the class? I don't think anybody was at the last class that we did.
I'm supposed to be.
You were supposed to be, but you didn't make it. That's okay. Okay, so when you're looking at a title commitment, so all of these little boxes are going to be like a little cheat sheet for you guys, so you can keep this with you if you're ever looking for information. All right, so critical info is going to be at the top. Okay, at the top. Effective date. This is always going to be what the closing date is that we have actually filed on the property. Okay. Alta, it's going to tell you if it's an owner's policy or a homeowner's, which is that enhanced policy. We'll go over the differences between that. And it's going to tell you if there's an actual loan policy on it. Okay. So a couple of things to understand between the owners and the loan policy. The owner's policy actually does cover the owner of the property. Okay. The loan policy is going to be the mortgage company. So if it's a financed transaction, this is covering the actual lender. Okay. And then understand it's only covering them for the amount that they are giving to lend. Okay. So let's just say The owner's policy is, so it's gonna have what the policy amount is right here. Let's just say the owner's policy is 200,000, okay? But the lender only lent 150,000. The loan policy for the lender is gonna be for 150,000, okay? So what does this mean in real life? In real life, it means that it's for the lender, it's gonna go up to that amount, 150,000. For the owner, it will go up to 200,000, okay? So let's just say something happens and there's an actual claim on the property, okay? Let's just say it's a doozy. Let's just say title just really messed up and somebody else had 50% ownership in this property. Let's just say it was valid and title company didn't find this other 50% vesting. And now they've got essentially two owners and they transferred it into one person's name, but they didn't take care of the clearing of this other heir or other person who owned it. So essentially, they have got to what we call cure this. They only have the amount of the owner's policy to cure it. So up to $200,000, okay? So what that means is, let's just say the sale price of the property was $250,000. If something happens and it goes to cure it is over that $200,000 amount, the actual owner will have to pay whatever is over that policy amount. Does that make sense? Yes.
Where does the $200,000 as the policy amount come from?
So that's a really good question. Typically, it is what the sales price is. The only thing that I can think of that would change from what that sales price is, if there's like something outside of closing, some ancillary thing that buyer and seller agree to completely outside of closing. A really terrible real life scenario that I can think of is if there's some sort of like appraisal gap coverage, they didn't want it a part of the contract, it was part of like some outside agreement that they were doing, which I'm not a broker, I'm not an attorney, I'm not advising to do that, please understand that. But that's just something I can think of.
Okay.
But whatever's stated in the contract is what the policy amount is gonna be for the sales price. Okay, great question. Everybody feel good about policy amount, owners, lenders, everybody understand that? You're giving me eyeballs.
Well, so are both those in place for every deal?
No, so if it's not
That's-
financed, it's only going to be an owner policy. If it's a cash transaction, owner's policy,
And if it is financed,
then you're gonna see a loan policy on there.
so you won't have the owner's policy?
You'll have both.
That's what I was asking.
Yes, I'm sorry if I,
Yep.
yep, you are going to see both if it's a finance transaction.
And the one is higher if, because the owner's protected by what they paid, up
Yes,
to what they paid.
yep, you got it,
The loan is covered for the lender based on what they gave.
you got it.
Okay.
Yep, yes,
And I'm not even thinking it through, so I'm just asking.
no, you're fine.
Can the owner not have a policy?
Yeah. Yeah,
I mean, I know you wouldn't. but
Yeah.
I was just curious if like, as long as the lender was insured, could
Yes.
you not be insured?
absolutely, which is why we see. The new closing disclosure that just came out not that long ago, where it has on page, I don't know, it's like page 3 or 4, where it says optional next to owner's policy. Yes, you
Wow.
can technically, if the lender is financing this transaction, now the lender's gonna require the lender policy, okay? So your client can choose to not have owners, okay? So a couple of things on that. The first thing is you guys need to understand that your contract actually does state that there's going to be, well, yours says homeowners. Your contract states that there's a homeowner's policy, to be given to the new buyer, okay? So just understand that if your client comes back to you after they see their CD and they're like, oh, it's optional, I'd like to take that out. That's fantastic, but we do need an addendum stating that from the contract because it is a part of the contract, okay? So that's the first thing. The second thing is we all need to understand the math behind it, okay? So up to 150, title insurance is on a sliding scale and it's based on the price of the home. So up to $150,000 for because title insurance in this area is split 50-50 between the buyer and seller. Up to $150,000, it's $2.88 per thousand for the buyer. And then it's $2.88 per thousand for the seller. Okay, if they choose not to get owners, you guys are taking it off, and you say the buyer only wants lenders, the loan policy is $4 per thousand. Okay, so is everybody tracking with me what that math is? It's more. Okay, so this is something that the general consumer, that you need to do the math with them so that they understand. Now there's a point where it intersects, okay? Because title insurance is on a sliding scale, so it will intersect, and eventually, it could be that it evens out. Like if you have a really expensive house, then yes, it does even out a little bit, but it's a really, really high dollar amount. If I could sit here for a second, I could probably do the math for you guys. But also the thing that they need to understand is that they don't have any coverage on them. It's only on the lender. Okay, so if something happens, they're not protected as an owner. They could lose their assets, they could lose their investment, everything that they put into it, they could lose. It's only going to cover the lender's money. Okay,
And so the title loss being split with buyer and seller, it includes that and the mortgage company part of it as well.
yep, absolutely. So what we do as a title company is we give the lender their policy for $100 because we don't want it to be a hardship. We're extending that policy to the lender for $100. And so what the buyer essentially is paying is their $288 per thousand, and then $100 for the lender's coverage. Okay. Are you good on that? Really?
Does it show it like that on the settlement statement?
Does it show it like what?
$100 for the lender's policy?
Sure does.
Oh,
Yeah, sure does. We did go over that in the part 1 class. Yes, so, but we could probably get you a copy of that information if you wanted to see it. Let me see if I can, oh, good, I can just go down. All right, any other questions about the loan policy versus owner's policy? No? Okay. Let me get rid of this little guy. Even on there on the screen? Oh, he is on the screen. Okay. Okay, so the estate or interest of the land, this part right here, this is going to be like, part of the legal description. The short form legal is going to be here. Who the land is going from, so the seller, okay, and oh wait, hold on, this is legal. I can't read this. It's like too close. Yes, the legal description is here. The type of interest, so fee simple, typically it's fee simple here. And then it's going to be signed by who the actual title company is. We have, in our company, we have several people who do the exams, that do the research on this. And so it's going to be signed by one of our internal staff who has a title license. So you guys probably see Sarah Woods on a lot of yours. So we call them our policy typists that go in there. Okay. That stuff's pretty easy.
Can I ask a question then?
Yeah.
So we had an incident last year where the county required us to do a whole new survey because every so often they had to, and cost a lot more to do that survey because they wanted a new description.
Legal.
Yeah, so does it just depend on the county? Because that was like out of left field for us and delayed things and stuff, so every county has a different policy.
Every county has a different policy. I will tell you a lot of times it depends on the age of the inception of the property and how long ago it's transferred. We see a lot of this in Richland County. Some
Homes.
Holmes County, yeah, a lot of. See it in a lot of rural areas, especially if there's been a lot of farmland that has been parceled off. in the smaller chunks, yeah. And I think the intent behind it, and I don't work for the county, so I don't know all the things, but I think because there's been so much movement, they want to make sure that they actually know the proper metes and bounds for what this is, like from an organizational government standpoint, they're just trying to make sure that they're accounting for every piece. And I think it really comes back from a tax value perspective, right? Like they want to make sure that they're getting every little penny and they're accounting for every little square foot of land to make sure that they're getting their tax dollars. Now, I'm not trying to be that cynical about it, but if we're just following the logical, okay, like why would a county care? Well, I think it's all about following the dollar, they want to make sure that everything is lining up. So we see this a lot of times if parcels have been transferred for, 30 years. If it's been transferred from like a big farm and it's, like 2 transfers, out. If it hasn't been surveyed, and it's transferred like a certain amount of times, some of them just automatically want to survey after a certain amount of time of transfers. And yes, every single county is different. We have some agents that in Richland County, for example, whenever they go to do a listing, they get a tax and legal. And we actually call the county directly on every single property that they are about to list, because we want to make sure that we're catching it if it is stamped for a new survey. And the reason for that is we've been caught with, we checked the prior deed, there's no stamp. It doesn't say that it needs a new survey. And then we go and we get to the county and they're telling us, oh, well, the deed before it was stamped conditional. Oh, so now we have to check 2 deeds prior. Normally we would have to just check the prior deed. So we want to make sure we're giving as much information and accurate information to our agents. So unfortunately, there are times when, and in this instance, we didn't know if that current deed wasn't stamped conditional and it was the prior one. Here you go. Now you go to the county and they won't transfer it. Like, I don't know. I don't know how the person, it was stamped conditional here, but then it transferred. Like, I don't know how this person got away with it, but they did. And now you're caught on the second transfer. Now you guys have to pay it. Now you're seller. So I'm not really sure what happened in the middle. Who knew who? But something happened and it got transferred. And so now you're stuck with it because it wasn't on the prior deed. So does that answer your question?
Yeah. It's all-
Okay. Is anybody like about to fall asleep yet? No? Okay. All right, so then we're gonna see the actual legal description from Exhibit A. This is gonna be the second page. And if we go to the second page, the Schedule B, these are gonna be the requirements, okay? So this is, when we do our search, we're gonna send the commitment to the lender and we're going to show them a whole entire page of things that say, hey, A through F on this particular one, and there might be more after that, A through F need to be paid before this property can be transferred. Now, sometimes people get all hairy canary. They'll see a copy of the title commitment and they'll say, oh my goodness, all of this information is right here in black and white for everybody to see. It is public record. And so it's already there in black and white for everybody to see. So if your clients say anything to you, like sometimes it just feels really vulnerable when something is like on one piece of paper for your clients. I'm sorry?
Give us an example of that.
The requirements, like sometimes there's a tax lien. Let's just say it was a child support tax lien. And we're saying, hey, this child support tax lien needs to be paid off before we can transfer it. Well, so it's actually going to say it right here on the requirements on the title commitment. And sometimes people get really, they just feel embarrassed, vulnerable about all of the information being there. So, and I understand both sides of the argument. Yes, it's public record and people can go look it up. And then people say, but it's another thing to put it on a piece of paper and, show everybody. So, and You know, you can't have it both ways. You can't say, I need to know all the information, but don't show this information. You know, we either show it or we don't show it. So I think the thing that is really good for you guys to understand when you're working with your sellers is that you tell them, hey, it's a requirement, it's gonna be paid off. The actual final one that we give to the owners, to the new owners, is not gonna have any of these things here, okay? It's not gonna show any of those priors. So the only time they are ever seeing this information is when we send through our portal a copy of the commitment for everybody to look at, okay? And probably 9 times out of 10, your clients aren't actually reading through it anyways if they're the seller, because they don't really care, they're selling the house, so they don't really care what's attached. Unless they have a bunch of liens and they're like, oh, what is attached? Okay, so I just want you guys to know that whenever you are the listing agents, we do send a copy of the title commitment to both the buyer and the seller, so everybody has a copy of the commitment, okay?
No idea. I had no idea the buyers could see my sellers, tax liens, mechanic liens, everything associated with the property.
Yeah. Yep, so it's in our portal. No, that's okay. Yeah, well, and here's the thing, we find sellers really aren't clicking on it. We find that they don't. I think that the listing agent sometimes will click on it. And really, if there's an issue that pops up, yeah, they're gonna click on it and they're gonna say, oh, I wonder what this means. But yeah, they're not really looking at it. So, and here's the thing, here's my intent. I never want you guys to say, you didn't tell me, we were looking at you guys didn't tell me that this is what happened. So, you know, yeah, it's true. It's true. That's what we do. And like I said, it's all public record, so people can get a hold of the information. So this is what we're working on. Okay, so these are the requirements that we're working on to be paid off. Okay. So it's gonna say any kind of mortgage, so that there's a mortgage associated with the property. It's gonna say what the mortgage, who the holder is. That's gotta be paid off.
It doesn't say the amount, does it?
It will note the original amount. Yes,
So how much is still owed on the property? Buyers will know how much.
no,
is still owed?
the original amount, like whatever the original amount was for the original mortgage. If there's a home equity line of credit, if there's any kind of a lien, it'll say what the amount of the lien is. If there's a delinquency, you know, from a foreclosure, any of that stuff, it will state the amount.
It's only stating the loan amount, like actual.
Whatever, so if it's a mortgage, it's gonna say what the mortgage note amount was for. It's not gonna have the original sales price. Does that answer your question? Okay. So other things that are gonna be on Schedule B, we talked about, like if there's an IRS lien, child support lien, any other types of lien are gonna be right here.
So
So buyers can see if sellers, buyers can see if sellers have a lien against their property for not paid child support.
Yep,
So if I owe $20,000
and they can look it up right now. Anybody can look it up right now and see it. Uh-huh. Oh, yeah,
I can go track down and.
yep,
So and so.
absolutely. It is all public record.
Where do you find that?
The county recorder's website.
Everybody else.
No, it's okay. Yeah.
I am not a PI.
Yeah.
We all need to watch out for Tiffany, apparently.
Stalker.
Are you guys totally wigged out by this?
No, I think it's great.
Oh, okay. All right, because I can't tell if you guys are wigged out or if you're.
Should I go home now?
It helps you to try to stay above board if you don't want people to know.
Yeah. I've
Yeah.
got a list.
Like, could I ask my clients if they have a child support?
Say that one more time.
Ask my clients if they owe child support?
You have to ask your clients if they know if they owe child support. It's just gonna, it's just gonna be
You're
here.
be able to talk your client off the ledge if they freak out because they see it.
Yeah.
Like, oh, the buyer
Yeah.
doesn't see it, like.
It's okay.
Record, like they could have looked it up no matter what.
Exactly. And really, that's the message is, hey, this is all public record.
Yeah.
Like
You
there's.
think this is bad, you should look at the post office, your pictures up there too.
If someone owes $20,000 back child support, they can't sell their house until they're.
If it's a
Nobody,
lien against the house.
nobody can sell a property if there are any liens associated with it. So as a buyer, I wanna know what's associated with this property.
Yeah, but it has to be found as a
It's a-
lien though, right?
Like, if it's
Yes,
not
it's
a lien against the
associated
house,
with your social security
It's not
number.
automatically a lien.
it's different. Okay.
Time out, flag on the play. So, sorry. So there's liens against you as a person and there's liens against you associated with your property, okay? So child support, IRS, those are gonna be associated with your social security number. So
So
it's gonna follow you, but your house is like the collateral. So they're saying, like, if you wanna sell your house, you've gotta pay your child support lien out of the proceeds of your house.
I think that doesn't mean anything.
So it'd only be if you have back, if you're not, are keeping up.
I don't have any kids, what are you talking about?
But I
That is not
like, I have a client who he owes like
Yeah,
he can't buy a house right now because he owes child support
yes,
from years ago.
years ago,
Maybe like when they're like years ago.
Yeah.
That caught up.
got it, yeah,
And, but like,
yeah,
he's got a whole different life now, but he's still paying
Yeah.
that off.
still paying it off,
So he technically can't buy, and if he owned a property, he wouldn't even be able to sell that property unless.
Right.
He paid that.
right, right. Yeah.
So-
Well, you're right,
A court record, that's not just if someone owes child support, no one knows, I mean, they'd have to.
Be delinquent.
They- yeah, it's if they owe it, if it's delinquent, if they're paying on their child support and it's current. Then they don't have to worry about it if it's current,
What if they're paying back child support?
well, then yes,
That's,
then that's a lien, yes. Yeah,
I'm like.
I hope he's not.
I don't know where to go with this. Okay. Okay, so basically everything that we find in our search, that must be paid off, we're gonna cite it here, okay? Even your baby mama. And so the lender is gonna take a look at this, and they're gonna say, okay, great, as long as those are paid off, we're good, we can loan money, okay? From the Schedule B, or excuse me. Yes, from the Schedule B requirements, and then we're gonna go.
Page 4.
Yeah, hold on a second. I wanna see what page I'm gonna go to.
It's page 4, Schedule B, section 2.
Thank you.
See, I was all over it. Keep going.
Is this page 4?
Gonna be saving system. There you go. Quit doing what you're doing.
Oh, hold on, I wanted to know.
Wait, that's not it.
No, that's okay.
It's 1, 2, 3, 4, you see. That's the page, so one more.
Okay. Oh, okay. Got it. All right, so this, okay, so there's Schedule B1, 1 are the requirements and B2 are the exceptions, okay? So exceptions to the policy, this is saying that as a title company, we are not going to cover these exceptions. So an example of an exception would be an easement that's already associated with a property. So if there's a shared driveway easement, we're saying, hey, here's the easement, it's showing that, you know, neighbor A and neighbor B, they gave permission, this is who maintenances it, you know, you guys can see here clear as day with this easement, that this is a shared driveway. So you can't come back on us as a title company and say, I didn't know it's a shared driveway, because we're actually showing you a document saying it's a shared driveway, okay? Other things would be, a deed restriction, okay? So I've used this example before and I love it because it's the funniest one that I know of. Years ago, I saw a deed restriction on a property, they couldn't, have a chicken farm. On this particular property. So, it right there in black and white on the deed, it says this property can never be a chicken farm. You can't come back to us and say, I really wanted a chicken farm and I'm really mad, I bought this property because I wanted it to be a chicken farm. You can't come back to us and say, you didn't tell me. We're telling you, okay? It's right there in black and white. So anything that you can like see with your eyeballs, it's a part of the survey. those are things that we are putting here on the exceptions that we're not gonna cover, okay? Other things would be, encroachments that we're seeing, which is another reason why the lender requires a survey on a property. So if you get a survey on a property and you're seeing that there is a shed from the neighbor that's encroaching over your property, we're gonna say, hey, we're not gonna cover that. You can see it with your eyeballs. We're showing you on the survey, you're buying it as is. That shed is encroaching onto your property. You can't come back to us and say, I didn't know the shed was on my property, because we're showing you, okay? Now, as an agent, when you get that survey, this is the part where you can go back and like either renegotiate or do what you need to do to get the shed moved, or I don't know, work your magic on taking care of the fact that the neighbor's shed is encroaching on this property. All right, we're just the information givers. Okay, we're sharing with you the survey, we're sharing you this information, so you can let your client know, hey, you're advised that the shed is encroaching. A little side note, if the deal is not financed, we don't require a survey to be done on a property. Okay, so if it's a cash transaction, we're not requiring a survey. Just gonna say it one more time. If it's a cash transaction, we don't require a survey. So if you want your client to have a survey, or if your client wants a survey, you have to tell us, tell your escrow team. Have your client email us, text us, do something and say, hey, my clients want a survey on 123 Main Street, because if you don't, we are not gonna do it.
I had to learn that one the hard way.
It's a way for you to show value to your clients by telling your client.
Absolutely.
You're paying cash, no, a survey does not automatically come with it, it's $220. We highly recommend this.
What was that?
No,
Ours is 220 with us. Other people may charge a different amount, but it's 220 with us. We use Exacta. If you want to use a different survey company, you can. That's the deal that we worked out with Exacta. That's how much they charge us.
And you can make it have your pass.
Yes. Mhm.
Oh.
Yeah.
We need a survey.
We need a survey now.
I know we're closing in 2 days.
Yes. So I just kind of want to backpedal a little bit with the survey, just to go back to Scott's question about when they said, hey, we need a survey. The type of survey that he was talking about that the county required was a boundary survey, okay? So there's a difference between a boundary survey and a mortgage location survey. The mortgage, oh, she's so sweet. The mortgage, I have gum in my mouth, hold on. I gotta stick it underneath my tongue. The mortgage location survey is just, they come out, they take a couple of pictures, and they're gonna give you an aerial view that shows you where the parcel lines are, and if anything's encroaching onto your property, or if anything on your property is encroaching onto the neighbors, okay? It's, that one's the one that's $220, can be done very quickly.
Do they mark the boundaries?
nope.
A boundary survey, which is different than the mortgage location survey. The boundary survey, that's the one where they will go out, they will actually put pins in the ground to mark the borders. Now, you're still gonna get a picture and all of that, but they're actually going to stake it. That one is expensive and can be a 6 to 8 week turnaround time, okay? Depending on how large the plot of land is. You know, they can range from $600 for a small lot. I've seen them up to $2,500 for a really, I mean, and up for a really large, you know, plot of land. So, if your deed is stamped conditional needs a survey, just know that's the really expensive one that takes a long time, okay? Just to get the mortgage location survey, or like if it's a cash buyer and you say, hey, tell them you want a survey, that one's short turnaround time, $220, okay? Any questions on that? Good, okay. All right, so again, Schedule B2, these are the exceptions. These are things as a title company that we are not going to cover, okay? Easements, encroachments, things that you can see with your eyeballs, okay? Another thing to note about the B2 for the exceptions, and again, this is standard language that is going to be on any title commitment. Title insurance, we are regulated by the state of Ohio, so no matter what title company you go with, you're gonna see the same things because we are regulated, okay? This is not just like a Stonegate thing that these are our exceptions and somebody else shows different exceptions. Standard exceptions are also oil and mineral rights. Okay, and that is a thing that a lot of agents don't know. As a title company, we are not just searching for the oil and mineral rights on a property, okay? Now, sometimes if it is a lease that has been signed within the past owner or two owners, we're going to see that and we're going to show you, and sometimes we can actually pull a copy, pardon me, of the lease, so we can give that to you. But in general, we're not doing that search, okay? So let's just say you're selling 300 acres in Amish country, okay? They could have a lease that's 99, it's a 99-year-old lease. We would never know that because we're not pulling it. So in our standard exceptions, it's going to say we're not covering any oil or mineral rights. Yes,
If somebody wanted that, could you do that?
yes.
It's an additional cost.
It's an additional cost. So we have some contacts that actually specialize in oil and gas searches, and we're gonna contact them. After we go through our examiner and say, hey, can you find this anywhere? Then we're gonna reach out and we will give you an estimate because they're gonna give us a timeline. It's not fast to get those, and they're gonna give us a cost. It's $200 in a couple weeks.
Some people it's important, so. I
Oh,
think
for
it's
sure.
good to do.
If I'm selling 300 acres in Amish country, yeah, or buying, oh,
Southern Ohio.
Southern,
it's good,
really?
You have to.
You have to, absolutely, absolutely, you wanna know, you sure do. If you see a pump, if you see a gas house, if you see something on your property and you're looking through the commitment and you don't see any kind of an easement, if there's something that you see on the property, you can bet your bottom dollar, there is some sort of a lease agreement, and you wanna know what it is.
You don't.
You absolutely will not have the rights, yeah, for sure. Yep. Real life practical application, what this means is you have no control over the equipment that is on your property, who enters and exits your property, because that lease will say that they have the authority and the privilege to come onto your property to maintenance and maintain it. And as the new owner, you're also not getting any of the royalties for any of that. Okay, so just know like how to educate your clients on that, okay? That one's a real big one. It can be a doozy. Oh, taxes and assessments. So we have taxes and assessments on here. Taxes have the first position on any property, which means they actually take first position over a mortgage. Okay, so if there's a mortgage on the property, not getting your taxes paid, they can foreclose for your taxes not being paid, which is why like 98% of the time, the mortgage lender says, hey, we're just going to include your taxes in your payment and your monthly payment, and we're gonna make sure that those get paid, because your lender is just giving you $150,000 for this land. Your taxes are like, $3,000 a year. So they're not gonna let their $150,000 asset be foreclosed on for $3,000. They're just gonna pay it and they're gonna charge you a fee for it.
I was just gonna say, I wonder if that weren't true, if that couldn't take first position, if they would not be included in mortgage. You know what I mean?
For
Like-
sure. Yeah, yeah. They're not just doing it out of the kindness of their heart. They're protecting their butts and their money. Yeah.
So, question, so with like a sheriff's auction and things, I've done a couple of those. I know most of the time when we're doing things with you guys, all those liens are paid for. But sometimes you find there isn't enough funds to pay off the liens and
Yes.
things like that. So what does that mean? What do I tell? Like, I've done those auction.com or
Yeah.
some of those, like, I can't tell my client, well, they're gonna pay those liens. They're required to pay certain liens if they can with the funds. What, do you know anything of what they don't have to pay, what could my client be stuck with?
So yeah, so you're talking about like two different types of auctions.
Yep.
So the first one we'll talk about is like sheriff auctions,
Yep.
okay? So in the timeline for a sheriff's auction, when a property gets foreclosed on by a bank, they employ a title company, who knows where.
Yeah.
to do a search on this property to see what liens are out there that are associated with this property, okay? They're not worried about the person, because the person is, you know, they just want to know what's associated with the property, okay? So they're not looking at social security numbers to see if a baby mama needs money, okay? This is just, like, he's not even that, he's not paying attention to me at all. That joke was for you. We just want to know what's associated on this property, okay? So they do something called Liz penance. It's probably a word you guys have heard before, but like it's Latin and nobody actually knows what it means. So Liz penance means that they are going to publish publicly something that says, hey, 123 Main Street is coming up for foreclosure. If you have any liens associated with this that you are owed, please let us know. It's got to be in the paper for a certain amount of weeks. And so this is one of the ways that they find all the lien holders associated with 123 Main Street, okay? So they are doing their due diligence and they're actually doing a search on the property, but sometimes there are liens out there that are not filed with the county. And so this is what they're trying to do, is they're trying to scoop up anything, either private liens or something that could be associated with this property, okay? That's the Liz penance process. So once they do that and they get the search done, then they compile commitment. And this type of report is called a preliminary judicial report. And the preliminary judicial report is actually the report that goes to the bank holder who's holding the note and the share of sale company. So it's a little from the perspective of price, it's cheaper. Okay, it's not gonna, it's like $275 per thousand. It's a little bit cheaper and it doesn't give you all the warranties than the actual commitment does. It's saying, hey, we did a search. We think this is what's associated with the property. Okay, so this is what they use to clear the liens on a share of sale property, okay? So let's fast forward, day of the auction, okay? Here's the commitment or the preliminary judicial report that says, hey, we found A, B, C, D, E, F, G. Those are going to be paid off. And a lot of times they're saying the property is whatever 2/3 the value. That's what we see a lot in these sheriff's auctions. You know, if it's a $100,000 house, you know, they're going to start the auction at 75,000 or 66 or whatever. Apparently I'm great at that. So they're going to say we're having a starting point at it. And of course they're going to do their math to make sure that any lien holders can be paid off. If you see it above that 2/3 value, it's probably because they got to get all that other stuff paid off, right? Okay, so they say, all right, great, those are going to be paid off. Okay, now you win the bid. Okay, great, I win the bid. You know, all these lien holders are going to be paid off. Property is transferred in your name. Now another lien holder comes up. On you. Okay, because the preliminary judicial is not giving you title insurance. It's not saying, hey, yes, for sure, this is everybody. And if something happens, we're going to make sure that we take care of it for you. Okay, so we work with a lot of investors. And this is one of the things when I work with investors, I tell them, I say, hey, if you're doing a share of sale auction, you please have us do a search for you. You know, $275, super cheap. Make sure that their preliminary judicial report and the actual report that we give you match up. And then I don't know, okay, because I know title insurance, and I know all of the bad and the ugly, I would always get title insurance if I ever purchased a property that was a foreclosure and a share of sale. Because I've seen before when an investor bought a property, they were, we found $22,000 worth of liens that were not attached to this property.
So just because I want to be
Yeah.
helpful to my investors and
Yeah.
stuff on that.
Yeah,
So let's say, okay, the sheriff's auction, whoever's handling that, they've done that, they've got that preliminary. But we haven't gotten to the auction yet. You're saying that prior to the auction, I should be able to look at that?
Yeah.
Because I ran into problems where I couldn't get that information from a company in Cincinnati who ran all of them, and it was
yeah.
a pain.
So you
How
can-
did you guys
So you can ask us, we'll be able to do a search for you. We can get you a,
say if you want this, we can do it, but here's the extra cost.
it's $275. Now, if they actually win the auction and they say, hey, I want title insurance, then the closing can actually go through us, and we, from there on out, we kind of treat it like a normal closing. We've already done the search, but we'll handle the funds. We'll talk with the sheriff company, sheriff's sale, like their secretary or whatever. It's a really weird process because they give us a bill of sale, that's their purchase agreement, so you're not actually using, you know, your purchase agreement, and you guys have to have like this outside contract, anything about price that you're getting paid. it works really differently, but from the best interest of protecting your client all day long. All day long, yeah,
That's something.
yeah. You know,
I
typically
didn't know
what,
about that after.
yeah, typically what we tell people is, hey, if you win the auction, we're gonna roll this into our costs, not you're gonna have to pay $275. But if you don't win the auction, or if you decide because of the report that comes out, you're like, well, I'm not touching that with a 10-foot pole, then we would invoice your client.
Yeah.
So, yeah.
It's good.
Make sense?
Yeah.
Okay. The 1 hour class, oh my word. Okay,
Somewhere else.
huh?
Do you have to be somewhere else?
I don't have to be anywhere else, but I'm sure you guys have to be somewhere else. Okay, Margie, I don't know if you're still with us. I hope you're all right. Can you hear me okay? Where you at?
I'm okay, yeah, thank you.
Good?
I'm good, yes, thank you.
Okay, all right, hooray. We didn't lose Margie. Okay, just want to make sure.
Question.
Yeah.
You had said that there's 2 different types of.
Thank you. In my head, I was like, I feel like there's something else I was gonna say. Okay, so that's the sheriff's sale auction. The other types of auctions, like the, I can't, yes, I'm like, what is that one? Pub Zoo. Y'all, I don't know where they get their houses from. I don't know what the process is. I have no idea, and I'm pretty sure that they make you use like some other title company. I cannot speak to what they do and how they operate. The only thing I will tell you is make sure that they are giving you a title insurance policy or giving your clients a title insurance policy. Make sure that there's a commitment, that you can read it, and that they're giving you a title insurance policy, because you don't know, right? Like, I don't know what title company.
Done it correctly.
You're trusting that they, yeah, you're trusting that they do it correctly. I mean, you can come over here and wring our little necks if we mess up. Pub Zoo, I don't know where they're at, right? Like, you're probably gonna be on hold with somebody for like an hour. And now, granted, on the title commitment, it is gonna say who their underwriter is, so you can look for First American, Old Republic, look for the little thing. And if there actually is a severe issue, just reach directly out to the underwriter and like, flag on the play. So, okay. Let's see, what else about title commitments before we move on? Talk about taxes. No. So this page, this is just like our promise page. Ours looks a little bit different because it's got like a lot of this law from our underwriter. This is page, hold on, 6. But it just basically states like what our obligations are, for you guys and for your clients. Not really a ton on page 6 that you have to worry about. On page 7, it's got conditions. Again, for you and your clients, these are not the important pages. It just kind of talks how we operate as a company and the conditions of our commitment. Really the Schedule A, Schedule B1, B2, those are the really important pages that you guys are going to work on with your clients, and it really helps educate them. The other thing about this, you guys, about the commitment, if there are questions that your clients have, if there are questions that you guys have, please reach out to us and ask them. I will tell you, our team, they will answer whatever they can for you to help get you guys answers. They know if there's something that they can't answer, they're going to say, hey, we can have our attorney reach out and answer some questions for you. Or sometimes in certain situations, our attorney is going to say, hey, they actually need to get outside legal counsel, because here's what happens. Our attorneys are representing us for some of these things. And so while we can explain them and help you understand what they mean, we cannot give your client advice on like how to proceed, like if there's an issue, or, because what, and I'm not an attorney, so I'm not going to use the right legal jargon for this, but what happens is whenever a client talks to an attorney, they call it like implied legal counsel. Like basically they're saying, well, I was talking to an attorney and I just assumed that they were representing me. Okay. In our attorney's position, is they're actually representing us as a company. So there might come a point in time where they're gonna say, hey, you actually need outside legal counsel because you need somebody that's going to represent you to advise you on how to proceed. Does that make sense? What I'm trying to say? Okay, we will take you as far as we can and we will answer questions about what things mean, but we are not going to give advice. We good on that? Okay, well, yeah,
So I know Lynette and I and Sophia, we ran into an issue, and that's why we asked for some of this class.
yeah,
Because going back to the very beginning, you talked about what the coverage is.
yeah,
And I used to tell people wrongly, I've discovered, that you're covered by this insurance. If they have to find a lien against your property and things, you'll be covered. What I didn't realize is there were limits.
yeah,
And
limits.
it's based on what that purchase price was.
yeah,
Fortunately, we were representing a buyer trying to get a home, but then they had bought it, they were flipping it. And then they found out there was a lien of $125,000, which was more than he paid for it. And so they were willing to settle for like 80,000 of it and stuff, and then he would have been responsible for the other 45,000, I think. Flip-flops, okay, so whatever, but he's like, I'm just gonna lose money then and things, and it was a really, there's a lot of patience there, you guys did a lot of work, people tried to get, but I say all that because of two things. One is, don't tell people that it's covered because it may not be, it's covered up to what's
the policy.
the policy is.
Yeah.
And then the other thing was, we learned too, because that particular company, just somebody didn't do the job. It's an internet company that a lot of investors use. Matter of fact, somebody else wanted us to use that company, and we're like, not a chance, and here's why.
Yeah.
So be careful who you do with and, deal with as.
You know, like if Stonegate were the original ones who did that versus that online title company, you know, you'd love to know, like.
Yeah.
History of it.
Yeah.
Something funny, fires do use the darn.
But that's.
They
that's-
do. No.
Do you remember the companies?
You were able to get that switch?
It was like with an E or an I or something.
It was out based
Out of
on
Columbus.
Columbus, but like the seller of the property could not reach anybody, like he was on the phone with attorneys and stuff, like nobody could get a hold of this company.
Yeah,
Once they had like fire under their butt, so.
yeah,
But I'm just glad we didn't. Have that where somebody.
Emperor title.
That comes out,
Emperor, yeah.
Cause when emperor title, but it's. So just understand, like, we trust you guys and who you do business with matters, because. I trust that you're gonna find that,
yeah,
but I don't wanna ever tell somebody, oh, you'll be covered now, because. You're covered up to that.
up to that
It's
amount,
important,
yeah,
and that was a good learning lesson for us, and
Yeah.
every day.
Glad we were on.
So,
yeah, glad you were on the other
Yeah,
side of it.
yeah.
Yeah.
So.
You know, I never wanna throw other title companies under the bus for sure. But I will tell you guys, I do think it's important to understand, who the examiners are that are working for the title companies that you work with. So it matters, we try to use, so we've got a group of local examiners that we use that are boots on the ground in the courthouses day in, day out for our local geographic area. They are attorneys. That doesn't mean they're perfect, okay? They're humans. But in the areas that maybe they're not boots on the ground in every day, they do have contacts that are boots on the ground every day in those areas. And so sometimes when you see these out-of-state examiners, they are, like, everything is online. They don't have people looking in the actual books. So here's the thing that you find with the examiners. One, they're a dying breed. The way that they, when you talk about being a high C and details person, it's like crazy what they learn and what they know. And so sometimes in these areas where things are not online, they're like, I'm talking about like the big giant books where like you open them up and they're like reading the cursive from back in the, 1900s, early 1900s, and they're seeing things. If they've examined a property before, like there are things that they just remember about a particular property. So when they are working day in, day out in those counties, there are things that they're familiar with, that they know, that they see, they know how to get those answers. They have a network of other examiners that they can ask, so. I do think being able to have local connections is really important, so, just like everything, buyer beware, right? And another example of why title insurance, which is this piece of paper, well, I'll scooch to that one, why it's so important. Trying to get this up for you, Margie. Hold on one second.
She's gone.
She gone. Okay.
So that was the chat. She said she had to go, so I just thanked her.
Oh, okay. Thank you. Where's my standard versus? Here we go. Okay. Can I blow this up? I don't even know why I'm worrying about this. You guys have your own piece of paper. It doesn't matter. So these are some examples of hidden risks, of why title insurance is so important. I'm not going to read through every single one of these for you guys. But I will point out, the errors in recording legal documents, that this is one of the biggest ones that we find is errors. We find people that, in chains of title, there have been surviving heirs or spouses that haven't signed off on the deed. And so we have to go back and we have to get a spouse or an heir to sign a prior deed to get that filed. Fraud being covered is a huge one. In this day and age, I mean, I wish I could say we've never seen an example of fraud, but we have seen, you know, a girlfriend come to the table, you know, with somebody else's actual ID pretending to be the wife to sign documents. I wish that I couldn't use that as an example, but I can. You know, one of the things that the mortgage company does when they're checking through the entire package is they're checking to see if there's any fraud with signatures. I wish I could say that they didn't catch anybody doing fraud when they were signing documents, but they have, okay? I've been in this business for 17 years, so I've seen a lot. Fraud is huge, and I think in this day and age, there are a lot of people that, you know, if they could just use their powers for good instead of evil, we could be in a much better place. But they're not. So, invalid documents executed under an expired power of attorney or invalid power of attorney. Power of attorney is a really important thing. For you guys, you need to make sure that you know that you tell your clients that power of attorney must state that they can sell or convey real estate. Okay, that's magical language that we're looking for in a power of attorney. The original must be filed. The original must be filed before any kind of document that is using them as a power of attorney. So when we as a title company come back and ask you, hey, we didn't see this power of attorney filed, do they have the original? And they get all hairy canary with you, understand that that's an actual legal issue, okay? It's not because we're trying to be difficult and we just want all the documents, and we actually have to have it, that we have to file it, okay? And power of attorneys expire when the person who gave the power of attorney, when they are deceased. Yeah, so I was like, how do I say this in a good way? It extinguishes when they extinguish, okay? Yeah, so these are good ones. So if your client is like, what should you could just like scooch this to them and say you might. Yeah.
Going from like the power of attorneys and when you say it expires and all that, if there are any liens or anything for the property and they want to sell it, how does that work when the title transfers? When that happens, who would be responsible for that?
So the power of attorney only has authority to sign on behalf of the original owner. It's not saying that they're taking on the ownership of the property.
Okay.
It's just saying that they have the right to sign or the permission to sign on their behalf. So if Ginger gave you permission to sign for her to sell a house, she absolutely could, and you can sign all of those documents. It's Ginger's liens, right? Like it's everything associated with her ownership. You just have the right to sign for her. Does that answer your question?
But if Ginger dies, then it would go to.
If,
Whoever like the estate is or.
Yeah,
Or the TOD or whatever.
yes, so if Ginger dies, we would have to see, does she have a survivorship deed? Was there a transfer on deed affidavit? Does she have a will? We would have to know, like, what direction has she given for when she passes? If no direction was given, then, you know, now you're looking at a full probate time period, so at least 6 weeks depending on the attorneys, and can crank it through quicker than that, but it's gotta go through probate. And then the court is gonna determine, okay, what happens to her assets, okay? So if Scott is her heir and she's got $100,000 mortgage, guess what Scott just inherited? $100,000 mortgage. Did I answer your question? Okay. Somebody else had their hand up. No? Okay. I know that we're after one, if you have to leave. You won't hurt my feelings, but I wanted to share with you guys this enhanced versus owner's policy too. You guys in your contract do state the enhanced policy. So, it's the Alta homeowners, it's the one on the left. Okay, so the first 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 things. They both cover. The rest of them is what shows just the enhanced policy covers. And so Keller Williams Legacy decided a couple of years ago that they were gonna go to the enhanced coverage. So you guys, and we can share this to you via PDF as well, if it's something you wanna share with your clients. If you wanna give to your clients to let them know, hey, this is what the enhanced policy does cover, okay?
So the one on the right.
Yes, you got it. And it is 15% more.
Right on the left.
One on the left,
Where it says all the yeses.
So all the yes.
okay.
Is that what you said?
Yeah, well, no, I asked because it's written standard on the top and enhanced on the right at the top, so I assumed you wanna change that to the one on the right. Was enhanced.
So at the top of the two columns, it says homeowners.
So you want the one on the left that says Alta homeowners policy.
I'm just saying for future reference, change this, the order of that.
That's why we need to take our job.
Okay, sorry, I was not, I was like, I don't know what you're actually saying.
Enhanced versus standard, yeah.
Okay, okay,
Or
okay.
switch the columns. Or switch the columns.
We'll talk to the Republic.
We'll let them know.
Get it with the public, you know.
Maybe we could add little thing that says enhanced and
Yeah.
standard.
That would be great,
Maybe that would help clarify. Okay, we'll do that, just for you.
thank you.
I know we spent a lot of time on the commitment and we spent a ton of time. Working. What other questions can I answer for you guys before we leave? Yeah,
I got lots,
okay,
sorry.
go.
Now, to you, this is second nature, I'll speak for myself when I say this, as realtors, if it's a title lien kind of issue, I stay in my lane.
Yeah,
So. Real quick to break this all down so that I can grasp it as best as possible.
I'm gonna.
Give me 3 points you want us to know about title insurance. 3 most important things we need to know.
Okay, okay, I need some clarification.
What does title insurance do? Top 3 things.
Okay, this is something that you want to be able to tell your clients?
Correct. We're gonna do videos. So very high.
Who said this?
No.
Okay,
And then 3 things for title policy and 3 things for title commitment, like. 3 things you need to know.
dang, Ginger. Okay, hold on, I gotta get my brain into different gear, so give me a minute. Repeat the first one.
3 things title insurance does for you.
Okay, so title insurance,
She's talking to her client
yes,
and they're asking, well, why do I need this?
all right, so title insurance, what was the second one?
Title policy,
Title policy, and third,
title commitment.
okay. Hold on.
The whiteboard, get on that.
I was looking for something to write on. All right,
Making it work for this.
She didn't tell me after you said that.
okay, so insurance, well, tell me again the second,
Policy
okay?
and commitment.
Can I say something to you?
Yeah.
Okay. So you're asking the same question, but just in a different way. So you can think of the policy and the commitment